taking it to the next level, always keeping you that information. I know we got a lot of beginners out there who may not know what to do. So this is part of our series, making sure you are financially fit, making sure that you're taking yourself to the next level. Call it a Financial Fit Friday. I'm talking about today, we're talking about those A plus setups. But before you can recognize those A plus setups, you need to know the difference between the B plus, the C plus, the D plus, right? And we're only talking about F plus, you know what I mean? But my boy's gonna break it down. So start them off, brother. What's the information we want them to know?
How you doing? IQ Heavy in the building. Yeah, now I'll get straight to the information. I know that's what y'all came for. So even though we want to go straight into the A plus setups, I want to get everybody to have a second to let's walk through the D to get to the A plus setups. So before going into the setups, I do want to give a few examples because most people lose money right in the first 5 minutes of trading. So like, let's make it a real call. When you get into a trade, what happens? Turns red. How would I know that? It happens to everybody. That's not actually a true statement. The first part of a A plus setup is understanding which your setup is. The first part of understanding those strategies is actually understanding what you're going to do when you get into those situations. So, for example, I'm going to tell you 9 out of 10 traders come into the market and lose in the first 5 minutes of trading. That's not a secret, but it's kind of like something most people don't talk about. The reason being is because you bought at market value. This goes over so many people's head, but this is like the beginning. This is a key to winning. There's a button inside of the app that you're using to trade, and it has a limit. If you tap the limit, you can choose what you want to buy at. If Tesla's at $397 and I want to get it in, I want to get Tesla at 397 because I think it's going to 400. Do you step in and hit the buy button? You got it's at 396 right now. I'm getting it. 39. Why? When there's a limit button. Market is going to let you buy, but market has a secret to it. It's like on Robinhood. They'll buy you 5 cents below your entry. So you will always get a red entry every time you buy into a market. Even if the trend is going up, it will buy you 5 cents down because you chose to do it like a casino. And to make that comparison, most people like to go to the casino on Friday and Saturday. Oh man, I'm running the casino. It's Saturday, it's Friday. I'm turned up. I just got my check. Guess how much the tables cost those days?
Mhm.
$25 a hand. At the bare minimum, 15. What if you was smart enough to go on like Tuesday or Wednesday? Guess what the price is like? I can tell you because I do it. It's $5 a table. What? So you mean that same $20 bill I could play 4 times and increase my odds to win just because I went on Tuesday or Wednesday instead of going on Thursday or Friday where I only get no times to do that? Because with $20, they're gonna tell me you need $5 more to bet, sir.
Mhm.
That's how it works. And that's how it works inside the stock market. So if you're not being strategic and buying with the limit button, this is what the limit button will do for you. You see Tesla at 396. You know what? I want it at 396. So I'm going to put the limit at 394. And I'll put another limit in there for 395. You can put more than one limit because you can open up more than one account. So you can set a limit, which is called a trap. We call them ghost entries in the business. It's a ghost entry. Now, when that market opens up at 9:30, there's a wick that will come down in the first 10 seconds of market open and it will grab every order below it, but only to a certain point. So you have to be strategic with your ghost entry. Now, when the market opens up at 9:30, guess what? You'll be green and you'll be green for the first 2 minutes. This is where discipline comes into play. Can you close out that trade for $300 because you'll be up, or $3,000? You will be up. But most people get greedy, and then that's why they lose in the first 5 minutes. Because after that 2 minute mark, they're up. They go, well, let me just see where this goes. The market just opened. But I just taught you something. If you get in on a market entry, you're going to be red. If you get in on a limit order, you'll be green because the market picked you up when it was red, when it was not even inside the play, and brought you to a point of green. Now, this is where you would execute and close that trade. That is for a skilled A plus setup trader. Now, D plus traders are going to lose in the first 5 minutes because They didn't know where the price was supposed to go. They don't know when they should get out. They're riding what we call euphoria, a feeling. It feels like it might keep going. Well, until it turns around, then I'll get out. Well, once it goes down a little bit, so when it goes up $300, you go, I'm willing to lose $20. Then it goes down 10 and you go, all right, I'm still good. Then it goes down 40 real fast. Now you're like, it's 20 over my 20, but it's not that bad. So I could do 50. Then it go down 75. Now you like, well, I could lose 100 then. I could use 100. I'm still going to be good. I got 200. And then it wicked to 150. You know what? I'm gonna just close it. And when you try to close it, it won't close out because the market is moving so fast that when you hit the button, it won't pick up your order. And now when it finally gets your order, you out with $20 and you upset because you was up 300. You lose in the first 5 minutes. That's how the market works. That's a D plus setup. And I'm giving you the casino analogy so you can understand that's what people do in the same concept. So think of it this way: when you go to the casino, you don't play every hand, do you?
No.
Unless you got the amount of money. When you, as a sniper, you're not taking every shot. It's a reason you a sniper. We're not taking everything. We're taking the things that make sense. So an A plus setup is just using that concept. It's more of a mindset than it is a setup. Your mind has to be set up to take that shot when you see it, not because you see multiple targets and you don't have multiple. Think about it this way: even if you had the amount of bullets it takes to eliminate all the targets, you don't have the amount of energy. Your fatigue will set in at a point. You will miss. So what was the point of taking the shot? So this is why we want to build our setups. So in this situation, I would say we would start at D, which is what most people do. Again, it's a random entry. You don't know when you're getting in. You don't know when you're getting out. You don't have a catalyst. You don't even have a plan. Those people are going to fail all the time. But it's like the casino for them. I was so close. I was up 300. Oh, I got to try it again. They're going to keep repeating that process until they run out of money. Period. And then they're just going to go get more money because all they need is a dopamine hit. They just want to win one time and then they're going to feel good. It's going to justify all the bullshit they were doing the whole time. And then you have your C traders. These are your C plus setups. This guy is going on straight technicals. He's like, I know it's there. If when it hits this level, this is when I'm buying. And I go, well, how do you know where it's going to go to after you buy at that level? Well, what if it hits that level and it rejects? What do you do then? Well, so you don't have a plan. So even though they have a little bit more than the person who doesn't have any of the technical skills because they don't have a random entry, they're randomly thinking like hope. Like because I hit this level, I'm hoping that it will play out the way I anticipate based off of technical. But technical doesn't change fundamentals. So in situations like technicals, your fundamentals can both go out the window if Donald Trump decides to come out and make a tweet and say we go into war with Iran. Technicals go right out the window. So you'd have to know where price could fall to or where price could rise to in a snap of a second, because you could lose everything in the snap of a second, or you could gain everything in the snap of a second. This is how trading works. So it works in your favor based off of you having favor. So again, you are waiting for your setup. It's an A plus setup. It only applies to you. It's like, every time I wake up in the morning, I go to the bathroom, I pee, then I go to the screen, I look at it, I chart it for 30 minutes. And every time I was noticing when it hits this level, it goes from this level to this level. And if it hits this level, it goes from this level to this level. Now we're starting to build because we still need to add a few more components. So now let's step into the B category, right? That's the technical trader with a pattern and they have some volume. They're missing one key component, but I'll tell you that when we get to the A. So they'll see the technical setup off the levels. They'll see the volume coming in. Oh boy, you can't stop them. They heard Donald Trump say something. They seen the noise coming in. They knew every time it hit this level, it's going to bounce off this level. But there's also a point where it has to have a catalyst. A catalyst is what I just said, which is Donald Trump talking. But see, you have to be in a trend. So if they're in a trend for market going up and Donald Trump talks and it's a positive, you are now in a trending market. That is a catalyst. The trend is momentum. We're going to the upside. Now we have volume because you've seen volume coming off the momentum off of what he just said. Now we have the technicals because the technicals will give you the levels. So every time we get to 477 on Tesla or 377 on Tesla, we bounce. Every time we get to 65K on Bitcoin, we go up from there. So understanding levels right now, 65K is a level on Bitcoin. If we do not get above 65K, guess what I'm doing? I'm shorting Bitcoin. I've been shorting Bitcoin this whole time because I've explained I understand the levels. So when we were at 126 and I told everybody we're going back to 50K, they looked at me like, let me show you. Let me show you how they looked at me. I was like, what? What happened? Am I saying something incorrect? See, I understand the flow. So I'm looking at the order book. I'm also understanding the
I think my bro went out on us. Hold up, wait for him to get back in there. Again, make sure that y'all are taking these notes, writing the information down. I think somebody did ask, is the one not talking real? Yes, sir. You see me talking. And so while my bro is getting back reconnected, I'm gonna read through the briefings. This is pretty much the flow of what happened today in the financial markets. You know what I'm talking about? So yeah. So midday briefing, $9 to 15.98, suggesting higher beta positioning is being cut more aggressively. Commodities are mixed to lower. West Texas Intermediate is down 1.8% to 91.33. And spot gold is down 2.4% to 4,367.64. Gold decline consistent with higher real estate pressure and a stronger dollar intraday. Corporate news: SpaceX has reportedly received orders exceeding the shares available in a 75 billion initial public offering shortly after formally marketing the deal, indicating strong demand signals into the transaction. NVIDIA Corporation confirmed it had certified the three largest memory chip makers to supply their most advanced high bandwidth memory products for NVIDIA's AI accelerators, reinforcing supply chain alignment for next generation compute demands. JP Morgan Chase & Co. upgraded Tesla Corporated to the equivalent of a hold and raised its price target 475 after changing its lead auto analyst, marking a less bearish stance. And then we got Anthropic PVC called for a framework where government and AI developers jointly decide when to slow AI development to mitigate risk, adding to the policy overhang around frontier model deployment. Lululemon Athletica Incorporated shares fell after the company cut its annual forecast, citing the deteriorating performance in North America. Overall, the business driver remains the rate shocks from the jobs upside surprise. Equity weaknesses being led by tech and other long duration exposures, while the dollar and front end yields reflect a market leaning towards a higher for longer, potential higher than expected policy path. U.S. equities finished sharply lower at the close of the stronger than expected May jobs report, pushed the Treasury yields higher and forced the hawkish repricing to the Federal Reserve path, triggering a broad de-risking move led by artificial intelligence semiconductor names. Sell-off snapped the market recent momentum with the S&P 500 failing to complete a 10th straight week of gains. At the close, the S&P 500 fell 2.6, reflecting broad risk positioning as rates. Yes, sir. Yes, sir. Appreciate
yeah,
that.
ran into a little technical difficulty real quick.
No pressure. Yeah, I was reading through the briefs. Why
Nah,
why
I
you just
figured. I
want to
figured
hold it?
that. I knew you could hold it down. So I said, my guy gonna hold it down for a second. I know that they're gonna wait around for the A plus setup because they didn't get the A plus setup yet.
And get the 8% for sure. So we can stop right there. You can get back into it.
So we jump right back into the A plus setup. So what we was missing on the A plus setup, right, is the technicals. So I'm gonna break it all the way down for y'all. You want the technicals in there. You want to also make sure you got the volume catalyst confirmed. You want to also make sure you got the market direction aligned, and you want to make sure your risk to reward is 3 to 1. What that means in that scenario is if I put out $1, I'm gonna get back $3, 3 to 1. So when I put out 500, I'm getting 1,500 back every single time. I put out 1,000, I'm getting 3,000 back, so on and so forth. This is how you run it based off an A plus setup. So the A plus setup is always going to be set that way, and you always going to know your direction, up, down, or even sideways. Never forget the trend. You got to have a trend. Where's the support at? Where's the resistance at? So you have 2 lines in the sand, and you also have an acceptance gate, and you also have a denial gate. The reason I say that is because even though you get to the support, you need to see if support will hold or will it be denied and fall through support? Also, and when we get to resistance, will we have an acceptance at the resistance after we break through it, or will we be rejected? Understanding what your plan is based off of those scenarios is an A plus setup. So I know if Bitcoin gets to 65K and holds and gets above 65 to 66, I'll take a Bitcoin setup to the upside long because it broke 65, which is the line in the sand, and it held above the acceptance gate. If Bitcoin goes down to below 60 and gets below 58, that is the support. If it breaks 58 and hits 57, I am taking a ride all the way down to 50K with Bitcoin because that is the resistance break as well as the support break of the previous support. So it will find the previous resistance, which is going to be a lot lower at about 52K. And that's how we manage our A plus setup. So we don't get into anything that we can't see. And we also can use catalysts like earnings. A lot of people use earnings as a catalyst. You also can use rate cuts. If you see a rate cut coming, if you know that there's a CPI report coming out, also a catalyst, a sector rotation, you start seeing things like sector rotations, ETF flows, so inflows, outflows, these all create catalysts. And these all put you in situations where you can take a simple $100 and turn it into $300 or $400 with less risk because we don't chase the market. We let the market come to us. We don't chase price. We let the price come to us because we dictate it. I'm never buying what they're buying. We're always buying what we choose to pay for. So if price is at $70, I'm not comfortable paying that. I'll pay $57. So I'll set up an entry for 57, but I'm not just doing that because that's what I feel. I'll look at support and see support is at $50. So I'm comfortable buying at 52 to see if it come all the way down to support. And if it do, I'll keep buying all the way to support. And then when we go back up to check resistance, maybe I'll sell and take some off the top. And if we break out, I'm with it. If we don't, I took some money off the top and we'll do it again.
That's big. That's big. That's big. That's big. That's the information that we need to know in terms of taking this to the next level in terms of the setup. And so now I'm thinking, definitely, one question that definitely may get asked is, which ticker do you suggest, for those A plus setups?
See, that's the thing. A plus setup is an A plus setup. There's no ticker I could suggest other than your setup. So your setup dictates the setup. So, for example, um, Robinhood, it can be an A plus setup because Robinhood has the ability to go from where it is right now to $300. So if you catch it low, you can ride it to a high, which is an A plus setup. Anything that give you do the trading the night before. So you set your setup the night before. So we don't ever trade the market that day. I'm never waking up 5 minutes before the market opens or hours before the market opens and kind of figure out what I'm doing. I've done it the night before. Trading always starts the night before. Preparation always starts the weekend before. The battle is always won before you touch the field. So if you're not trading that way, then it's not an A plus setup. Because I never have to guess price. I never have to know what or think what's going to happen because I already know what I'm doing. If this setup is not available, I'm not taking the trade. You don't have to trade every day. That was the analogy for the sniper. I'm not shooting a shot every day, but when I shoot, I kill. I'm over 80% on my hit rate. I'm in a trade right now over 80%. I just closed one for 233%. It's different. The small trades. I did a $33 trade and ran it up to like $80. It's not a big deal, but it's over 100% a couple of times. So it's just showing the concept of small money turning into big money. And then I'm going to post this into the Discord today so people can start to see, because it was challenged last week. We need to see some of these trades. Well, guess what I did for y'all? I went out and made quite a bit of trades, and I'm going to make some more today. But I'm only doing it to show you guys because I'm disciplined. I don't do this every day because there's no need for me to. When I take a trade, I might make $5,000. I'm not taking another trade the rest of the day. What am I doing? Trying to lose $5,000? Some people will be like, "Oh, we could make more now." No, you can lose the 5,000 you made. I don't know what concept you're under, but an A plus trader doesn't think like that. We've already made the money for the week. How many of you make $5,000 a week at your job? I'll wait. So if you make it in a day in a small session, maybe go sit down, go spend some time with your kids, go touch earth, go to the beach. It's getting nice out. Get some ice cream. But we're not trading every day. But in this situation, I did open up my trading ability to show you guys how it works and females, how it works. And this is going to be a little, I'm not even going to, you know what? I'm just going to throw it out there. Women tend to trade better than the men, and they tend to jump in way faster than the men. So y'all going to have some problems out there pretty soon, because I'm noticing most of the people I'm helping that reach back out to me be a lot of the women. I don't know if it's a pride complex, but they're willing to take this information and they run up a bag fairly quick, fellas. So they ain't going to need you in 2026 or beyond based off this trading algorithm. And I want y'all to understand, just yesterday, Thursday at midnight, no more $25,000 rule, PDT. You don't need $25,000 to trade all day long now. So they've opened up a casino for retail traders to lose all their money. Because remember what I told you about the first 5 minutes. If there's no discipline and you have no ability to just take one trade, one A plus setup, then you're going to take everything you see. And that is going to be until you lose all your money. It'll be a dopamine effect because you don't have a plan. It won't be, well, I'm just trying to make this money and then I'm done. You'll be playing until you lose the money because you'll be on dopamine hit after dopamine hit with the ability to go back to it every day. So be careful out there.
That's big, bro. That's big. Talking that real talk. Talking that real talk. Yeah, that's definitely one of the things to keep mindful of in trading, man. Making sure that you're coming in with a plan.
And
Because people just be missing
grade
opportunities.
every setup that you guys have. So when you're asking, well, what's the A plus trade? What's the A plus stock? Ask yourself that. Go through each of your trades and base them off of what I just told you. Was it a D plus trade based off of you didn't know where it was going? You just went off a hype. Was it a C plus trade? You thought you seen something? Was it a B plus trade? You thought you seen something and you thought you heard something? Or was it an A plus trade? You thought you seen something, you thought you heard something, and you confirmed what you thought you heard and you seen, and it was confirmable. Now we've got a trade. Same concept in life. You don't listen to what the people tell you. You don't think about what you see. You got to put it all together, and then you have the ability to have confluence. No, I seen you out with her myself, and I spoke to the girl, and she said, "You see the difference?" Versus you going, "Well, I thought someone said." You got to confirm. That's the confirmation process when it comes to trading.
Nice, bro. And then when it comes to because another thing beginners gotta definitely cut through is sticking to your stop loss. When it comes to stop loss, what do you suggest for them to keep at their limit?
To whatever you're comfortable with losing. That's what it means when they say, "Yo, only put in the market what you're comfortable losing." So at that point, if you put $100 in, how much of that $100 are you comfortable losing? Because you have to be willing to lose something. If you're asking me personally, I'm willing to lose half of whatever I'm putting in. I put 1,000 into a trade, I'm willing to lose 500. If I put 20,000 into a trade, I'm willing to go down 10,000. I'm comfortable with what my losses will be if I'm taking the trade. Now, if I'm not comfortable, I'm setting even tighter losses. I might go put $100 trade down and go, if this thing moves $3 the wrong way, get me out of here. I'm not sitting here for that. Because most of my trades go straight up, and not being cocky, but I use momentum. So when I'm getting into a trade, if it ain't asymmetrical, it's not my trade. That's how I trade. I'm A plus. So I'm looking for an A plus trade. If it don't go straight up, I'll get out of a good trade. I could be in a trade where I'm going up $3 every 30 minutes. It's not fast enough. Like it should have been going up $20 every other minute because the trade I'm in is a Tesla play. So if it's moving too slow, I'm out of the trade just because it ain't fast enough because A plus setups don't move like that. They gap up and then they consolidate. That's what I'm looking for. So all my trades is gonna move, gap up, and then consolidate. I'm not getting in shit that gotta creep its way to the top because they're gonna get smoked when the market change direction. It's gonna drop hard. When mine's change direction, they're gonna drop, but buyers gonna step in because institutions usually play in the spaces that I'm in. So I'm only looking for dark pool orders. I'm looking for institutional buys. I'm confirming the order flow. I'm looking at the order book. I pay over $700 a month just to look at the order book. Like you got to be willing to pay to play. So there's a lot of things that I might pay for that are services and tools that most people won't be willing to pay for, but they're worth it because that's how I'm able to. You know what? Come over to the Discord. I ain't going to talk about it no more. I'm gonna just tell y'all in closing. The goal isn't finding more trades, right? The goal is finding a better trade. One A plus setup can outperform 20 average setups. Wealth is built through patience, discipline, and execution, not activity. So that being said, come over to the Discord because we're gonna put it in the link. That way you can actually look at and see what we're talking about because it puts you in a better position to see it. Remember, seeing it is believing it. We can write it down, we can talk about it all day, but then you can see it and then you can try it and then you can do it and then you can confirm it. This is confirmable. Every trade this guy said, it went straight up. All of the trades that he pointed out is 200 and something percent, 300 and something percent, 800%, 1,000%. I do 1,000% trades, guys, just to point that out. So even if you didn't want to do any of what I'm telling you, you didn't want to learn how to do any of this stuff, I call out the signals. So let me just cut straight to the chase for the other people who be in the back. Like, I don't care about nothing you saying. Can you call out a trade and what would it be? When can I get in? When do I get out? And am I going to make money? Yes, yes, and yes. So head over to the Discord. It's going to be great.
Sir, yes, sir. We just put that in the chat. Just put that in the chat. Check out that Discord link right there. That's the invite link. Make sure you get joined up. So definitely, but bro's been dropping game. We want to make sure that we finish off on the briefings because there's some good information that he has up on the Discord. It's the briefing, summary of
Yeah.
information.
Yeah, I'm gonna flood that
So
thing tonight with some more information. So it's gonna be lit for the people. I want them to come over and get a great experience. Even the free information gonna make you some money. It wasn't free for me. It cost me some money. Like I just told y'all, but it's gonna be free for y'all off the rip. I want y'all to make some money first, and then we can discuss if you want to come over to the other side. But make the money first. Have fun. It's the summertime.
amen, amen. The S&P 500 fell 2.6%, reflecting broad risk off positioning as rates rose and investors questioned whether peak AI growth rates are behind the market's strongest leader. Nasdaq 100 sank about 5%, reported 4.8% to 5%, its biggest drop since April 2025 as AI complex unwound. The Dow Jones Industrial Average declined 1.3%,
Yeah, listen.
outperforming growth
Before you
segments.
even go into the situation for all of the, I can just tell them real simple. We gonna bleed all June. June is bleed month. In June we bleed. If you don't believe me, go look back. History gonna repeat itself because it rhymed. But it's gonna let me give you an oxymoron, right? What you heard growing up. Never say never. Then you heard them tell you, never time the market. Never try to time the market. Does that make sense? If never is the concept that they're telling you to never say, why would they turn around and tell you to never time the market? Maybe flip stuff around. Start using universal law. Everything isn't clockwise, it's counterclockwise. So if they're telling you don't use it, you can't predict it. Hey, don't try to time it. Do that. Actually go try to time it. And you'll see that I could tell you that in September we're going to fall again because we just did in June. And if you look back, we did before in June. Go back to 2023. We did it. Patterns don't really change. They just repeat a little later. And if you in something long enough, you'll be able to see it. It might be an anomaly to see what's happening right now in sports with the Knicks going to where they at, but we've seen this pattern before. So we understand that in life there's anomalies, but there's also statistics. Statistically, this makes sense because they haven't been to the playoffs and then got out of the playoffs, the New York Knicks. since the 80s, since before I was born, I believe. I'm an 88 baby. So the odds are it will be in their favor because statistically speaking, they would be due for one. That's where you could put math and feeling together, where you could try to be spiritual and be like, you know what, this might make a little bit of sense. The basketball gods might want them to win this time. We've seen the
Might be
Spurs win
right.
it before. We haven't seen the Knicks win it in this time frame. So now you get a new time frame to see something new in your time zone.
Oh, that's real. It was 1999 since they were last in it against the Spurs. So no accident, no accident. They love to
Nah,
repeat it.
like I said, you just look for the patterns. They be subtle.
That's facts. That's facts. That's facts. This is continue to read. The MCI World Index dropped 2.3%, signaling the move was global rather than purely U.S. tech specific. Rates and macro were the key catalysts. Payrolls beat forecasts in May, and unemployment rate held at 4.3%, reinforcing the view that the economy remains resilient and keeping inflection risk front and center. In response, front end yields jumped and markets moved to price a higher for longer and potentially higher policy path. U.S. 2-year Treasury, yield rose 12 basis points to 4.16%. U.S. 10-year Treasury yields rose 7 basis points to 4.54%. Germany 10-year yield rose 2 basis points to 3.04%. United Kingdom 10-year yields was little changed at 4.90%. Markets are described as fully pricing in a rate increase by end of 2026, and the next Federal Reserve meeting is June 16th, 17th, under new chair Kevin Warsh. Commentary in the session framed equity reaction as the bond market led repricing rather than a deterioration in growth, while the key debate shifted to whether the economy is heading towards stagflation negative or inflationary boom less negative for risk asset. The rate shock hit the most crowded positioning. A chipmaker gouge fell 10%, and the Philadelphia Semiconductor Index strong quarter narrative was challenged as investors rotated away from the AI leaders that had driven the rally from its year's lows. The move was characterized as profit taking amplified by higher discount rates. FX and commodities confirmed the risk off tone. The Bloomberg Dollar Spot Index rose 0.6%. Euro fell 0.8% to 1.1518. British pound fell 0.7% to 1.3331. Japanese yen was little changed, down 1% to 160.23 per dollar. West Texas Intermediate crude fell 2.9% to 90.38. Spot gold fell 3.6% to 4,313.58. Consistent with higher euro, estate pressure and stronger dollar, crypto tracked the broader liquidation. Bitcoin fell 4.4% to 60,757.81. Ether fell 11% to 1,579.86%. And Meta platforms fell 5% after the Financial Times reported the company is weighing a large stock sale. President Donald Trump said he's interested in U.S. government holding equity stakes in leading artificial development and plans to discuss partnership ideas with AI executives as soon as next week. Morgan Stanley is facing pushback from large brokerages over efforts to prevent retail investors from placing multiple orders for shares of Space Exploration Technologies Corporation, the rocket company's large initial public offering. Alphabet Incorporated Google agreed to pay Space Exploration Technologies Corp 920 million per month for computing power and a cloud services deal running through mid 2029. NVIDIA Corporation certified the largest memory chip makers to supply the most advanced high bandwidth memory products for NVIDIA's AI accelerators. Confirmed by Chief Executive Officer Jensen Huang. State Attorney Generals are drafting a legal challenge to Paramount Skydance Corporation's $110 billion deal to buy Warner Brothers Discovery Incorporated, laying groundwork for potential antitrust suits. Looking to the next session, the key question is whether today's move becomes a sustained derating of AI semiconductors or it stabilizes as position resets. Near-term catalysts and risks include follow-throughs in the treasury yield, or whether the front end continues to price additional tightening into 2026. Incremental messaging ahead of June 16th, 17th Federal Reserve meeting, particularly around how chair war frames, inflation risk versus labor market resilience, continued volatility in mega cap technology and semiconductors were crowded, exposure and sensitivity to discount rates remain high. Policy headlines tied to U.S. government involvement in AI and deal regulatory developments in media and large transactions. So I know that was a mouthful, but definitely a lot of good information there. Things to look out. Any thoughts on the state of the market or state of trading investing in the spirit that you want people to be mind of?
Yeah, wait out June. We got midterms coming up. I wouldn't do nothing. You wait until you can confirm something. So in this situation, give it 30 days and then see what the market is looking like. And then come back in and start attacking. Don't shoot before you know what the target is.
Amen, amen, brother. Amen, amen, amen. I appreciate you taking the time out. And so that was information that you make sure that you tap into in that Discord. Make sure you hit that Discord link right there. It's that key. It's that key, right? That we take things to the next level. I read some of the comments. I saw somebody say, I have a friend who's a rapper. He needs help in the rap industry. Young Crypto Night. Check him out.
Tell them the
Somebody
link. Tell
asked,
them listen. Tell them to link up with Bubble Pop.
shout out to the boy. Shout out to the boy. Is that somebody asked me, is the one not talking real? And somebody, I think they commented that like 3 times, twice at least. But yeah, no pressure. So you gotta listen up. You know what I'm talking about? But yeah, he says talking. He said talking that truth. Make sure you hit that link, that Discord link right there. Make sure that y'all take yourselves to the next level. This
So
is
no
key
more losing in the
information.
first 5 minutes. We ain't doing that no more. All 2026 and 2027. We ain't doing losing in the first 5 minutes, man. Cut it out.
Facts, 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 facts. And yeah, typically, if you haven't won in the first 5 minutes, it's probably best to close out the trade for sure. So that's definitely a good little rule to also move forward with. Make sure that y'all keep taking things to the next level. Keep challenging yourself. Keep focusing on those A+ setups. And keep practicing and keep trading with the community.
That's a
On that
fact.
note,
And I'm gonna drop a lot of new information in there for y'all tonight on the chat. I'm gonna get a little bit more revamp. 'Cause I've been working through the back channels and stuff like that. So that's why I have a lot of new content coming through. I've been working with a developer so that way he can help me out with a lot of the stuff. And I also got some agents. So again, it's gonna be a lot better for people. A lot more content, a lot more information, and a lot more access to the information on a regular basis to give you the ability to trade using it.
and man, brother, let's keep building.
You
Y'all
already
keep
know.
it up.
I can have you out.